All right, buddy, welcome in to another edition here of the Evening Trade Lounge Sydney. It is Wednesday, December 17th, 2025, 9:05 p.m. Central Time. I'm your host here, Gerardo G. Pius, and welcome into this session. Welcome in Eddie, Sadko, welcome in Vicky, welcome in Daniel, co-host here. Bernie, welcome in. Good to have everybody's here. We're going to here lock into this session, review what we did this morning, and kind of speculate how I see the week closing out. And yeah, so as always, right, these calls are for educational purposes only. This trade lounge here is a free event that I do every Wednesday here through Zoom. Basically, just speculating on gold, looking at the chart, sharing my strategy and my outlook for you guys there. As always, right, these calls are for educational purposes only, and for any idea or suggestion. It's pure speculation, guys. So please trade responsibly. Daniel, how you doing, man? I'm gonna go ahead and turn off my camera here just so we can kind of focus on the charts for the recording. This will be uploaded to YouTube. How's it going, Daniel? How's the weather,
Doing
man?
good, doing good. Gold's looking good.
How's the
Still
weather up
trying
there
to
in
break.
Chicago?
It's cold. Other than that,
Yeah, we warm up and get cold. It's a little wet right here, but it's fine. But yeah, guys, welcome in to the session, Sylvie. I see you in there. Let's go ahead and just quickly review what happened today. And it was a good movement, guys. It didn't go to the entire direction that I wanted to, the target of 43.86. But it's very, very important, right, to know how to make money out of these charts, guys. We were looking for entries this morning. This is a chart that I share with you guys. I think we had a where's it at? Yeah, we had a 10-minute rally-based rally, and then a 31 that came back to twice. It was a little tricky today because this first entry gave a good amount of pips. It came all the way back down and touched this area here and kind of all went back up again. So again, though, right, it didn't go to the exact target that I wanted to. It barely even got there halfway. But that's why it's really, really important to know how these pips multiply, especially with gold. Gold gives a good amount of pips. All right. And from this first touch here, we finished the trade lounge right at 8 o'clock. So at 8 o'clock, we were here. And again, right at 8 o'clock, that was one impulse. Here was the retracement. Okay. Here was the retracement right here. So our job is to try to find an entry, trying to calculate that retracement level, right? With the fib, with the candlestick pattern, whatever it is that you like, okay? To kind of get yourself some confirmation and entry. But again, though, how many pips was it from give or take the low or the higher low to the high? How many pips was that? That was a 200 and as a $23 price change. That is 230 pips, guys. 230 pips. Okay. I don't know, but 230 pips is a good chunk, Daniel. What do you think? It's plenty, man. I think you probably stepped away or he's mute. One of those two. But yeah, guys, that's why it's really, really important, guys, to understand the movement and how does it pay you. So we had selected potentially the 1 hour candlestick, right, as our control candlestick. The potential stop loss on this one was at the low. So even catching the price action at that arrow that we just shared with you guys, right, here, give or take, that was a potential stop loss of let's see here. It's an 80 pip stop loss. In some books, some people's mind that's way too much, or for gold, it's actually a very good stop loss. And nowadays, 50 is a little better. Anything below 30, I mean, I think you're playing with fire, right? But this pretty good right there. Okay. And yeah, and it gave us a lot more, even to the highs, right? Whatever risk to reward ratio that is. We play it like that, just shy of a 3 to 1. Okay, just shy of a 3 to 1 in that sense. So that's why it's really, really important to know your numbers. the technical analysis, the chart analysis, all that stuff is important. But it's like, how much money you want to make today? Okay. How much money do are you trying to make today from gold? Other pairs don't move as much as gold. Indices may, but we'll see. So that was the move that we had. We did have, remember I have an AI tool that kind of it looks for these entries for us. And during the course of the day, it was consistent and and persistent on buys. Okay, and it looked for buys the entire morning. Let's see if they show up here. Where are they at? Do I have the indicators hiding? There it is. Okay, so we took a few trades on it. Um, this one on the 5 minute chart, signal came and it came down here back to the entry and took profit at the TP1 level, barely missed TP2. And on the 2 minute chart, though, you can read the same information, and it gave some pretty good ones. It gave an early one, it hit TP1, came back down, gave a second entry, that one hit TP2. So for the most part, kind of those heads up signals are pretty well working pretty well. So I guess the big question, right? Where is price going now? And that's what we'll speculate here for us for this session. I'll go ahead and clean the sheets, get started back to the normal process that we always do. And let's see. Let's have fun here and take a look at the different scales of price action. Let's actually do this, guys. So I have us here in the yearly look. We have about a few more weeks left on the year to go. Exactly 13 days and 19 hours before 2025 closes. So each candlestick represents an entire year of data. And I mean, look at this, 3 consecutive 2025, 24, 23, 3 consecutive bullish candlesticks. I mean, could we come back next year, clean up about 38% of that, and then keep going higher? What I am curious to measure is, this low high, higher low, higher high, higher low movement right here. How long is that movement? And let's see. Let's just take a look here. Always with the fib. Skyrocketed. So yeah, it's way beyond this extension in this scale. In pure swing high, swing low structure, it's definitely way beyond its scale. Even on the per candle basis, it's also pretty much way beyond the scale as well to measure. So it's gonna be interesting because if anything, the only area that I really see a trend was basically here in 2019. Price pulled in about 23% of that year and then skyrocketed. Price kind of accumulated a couple of times between 50, 61% of 2020. And then we got this bullish candle. And then from here, again, a little retracement into 2023, and boom. This is the retracement, the actual 2024 year. It impulsed and it gave us a little retracement, and then from there it just took off. So let's measure 2024's candle, okay? Right quick. And look at that there, guys. Okay, it closed just above. Remember, I'm looking for patterns, right? Everything that I'm analyzing right now, I'm looking for patterns. I'm looking for something repetitive that I can measure. What's been most consistent for me is the Fibonacci retracement tool, and I'm just trying to collect data to kind of gauge where price could go, how's it opening, how's it closing, etc. Alrighty, so let's take 2023 for example. Okay, I do want to see how that one looks. Okay. And if we measure from wick to wick, low to high, okay, on that on this candlestick, look where it closed. It closed very near the 23%. Okay, slightly below. So the next year price opened, didn't really give us a wick down. Well, it technically did. Just above, just it touched the 38%. And then from there, almost the 50%. And then from there it goes in 2024, goes to the extensions. And that's the year. Okay, let's see how's it closing. All right, perfect. And there it goes. Okay. So what happened here? Candlestick closed around the 23% level. The next candle, it doesn't matter if it's the monthly candle, the yearly candlestick, the 1 second candlestick. This is a pattern that I see a lot. Candle closed, the next one opened. Candlestick closed around the 23%. The next one opened, gave us a slight retracement to about 50%, and then it shoots up. Okay, that was the pattern that it left for that year of 2023. All right, now let's carry it over and let's move on to 2024. All righty. And let's measure 2024. Wick to wick, okay? And what happened? Very similar story, right? Bigger candle, but very similar story. Where did price close? Very near the 23%. Okay. Let's see how price opened in 2025. Okay, it opened above 23%. Did we get a wick below it? We didn't. And price just takes off. So based on the last three candlesticks of the year, where is price slightly closing based on the patterns that we just analyzed? Okay, price is closing very near, right? So Betty, very near, okay, 23%. Would you guys agree to that? The last 2 years, price has closed at 23% or just around. All right, well, let's do the same thing with this candlestick. We got the low range, we got the high range. Could it poke a little bit higher? It can. But again, though, we're wrapping up the year here in exactly 13 days and 9 hours. And that's the question. Can we close near 23%? What do you guys think? Based on what we just analyzed or based on your speculation in general, what do you guys think? What do you guys think? Do we go with the pattern, or these patterns don't work? Like Bernie says, likely. I like that. It is very likely, right? That it can happen. And I like the number 4,000. 4,000 has been a number, right? That has been in the radar, holding its ground all year long since we broke 3,000. All right, so now let's kind of see how it looks on a monthly scale. Alrighty, and those same levels won't change. Okay, so monthly scale, okay, 1, 2, 3, 4, 5 consecutive months that are bullish. We got a big rejection there, and the buyers are still bullish there. Let's see how it looks on the weekly scale. The weekly scale, there goes the rejection, forming a rally-based rally, and then another rally-based rally. So based on this, right, it's got a lot of work to do for it to really come down. How many pips is that? Let's see. How many pepperonis is this? It's 329. Okay, that's a $329 drop. So here is where, in order for this to really happen, I think we would have to get the last 2, 3. How many weeks are left in December? 2 full weeks. Let me see. Let me check my calendar. We got basically 2 full weeks left of December after this one. Two full. And for the most part, let me turn on the sessions indicator. If we have approximately so 355 pip drop, the most is pushed up and pushed down has been around 350. So that's on a really aggressive day. I don't think will happen. If anything, right, we can have 2 consecutive bearish weeks of about 200 pips, give or take. Yeah, but for the most part, it's been dropping anywhere between 150 pips to 200 pips on an easy day, right? As you guys can see here. So it couldn't make it. I would say maybe let's say 200, 250. I'll give it to about 250, maybe back to these lows right there, if it really wants to drop. Okay. So if it really wants to drop, I think the 4,000 to close out will be very unlikely unless there's something crazy happens. But if anything, I would at least give it to right there. For what is called that 41, if it decides to drop. Yeah. All right. Perfect. Let's just put this here. Text potential uh year close. Okay. So I just did that based on the speculation that we had that has been closing for the last 2 years around the 20 near the 23%. Okay. So now let's kind of just really lock in here intraday and see what the market is giving us intraday. Let me one more time mark up my previous daily high and low. Excuse me, previous weekly high and low. So that's the previous weekly high. And over here is the previous weekly low, which is the same thing as the potential yearly close. Previous weekly low. Potential year close. Okay. All right, there it is. All right, perfect. And now here, from here, I go to the 4-hour time. All right, and I'm going to measure that candlestick one more time. Previous week. Welcome in, everybody. I get to say hello at the beginning, but welcome in. There it is, guys. Okay. So let's analyze what's happened during the week so far. Okay. Last week we closed with 4 consecutive bullish days. Monday we closed bullish, but it did not make a higher high or higher low. This one closed bearish. It did make a lower low, but this is the control candlestick right here, right? The range of Friday is still in control. Okay, the range of Friday is still in control. And there goes its range. There goes Friday's range. Go ahead and put that in there. Bottom. There it is. Okay. So there goes Friday's range. We're above its 50%, but it cannot trend up, right? So Monday we couldn't trend. Tuesday, excuse me, we went a little bit lower into about 78% about here, and they pushed back up. Wednesday, we got a bullish push, but it still cannot make that higher high. So something around this previous weekly high level, which is right around the 43.50, is making it very difficult for price to go bullish. Okay. So again, on a big scale, gold is bullish. No doubt about it, right? Gold is bullish on a bigger scale. However, it's just, how low could it go before it goes higher? That's just basically it. And our job intraday is just to kind of see where price would be going and everything else from there. Um, yeah, so let's see the levels here. Dad, anytime, feel free to jump in, man. Anything
Ah,
you
it's
see?
looking good. I agree with your control candle. It's been holding its own, and I'm still kind of looking. We have this nice harmonic pattern that is kind of played out. It's interesting. So we got this, impulse correction harmonic pattern here, but it's really wonky, terrible, not even a really good one.
Okay.
But as you said, I have a really sneaky suspicion that the 43.53 is going to hold for quite a bit, and I really am still looking for a better test of this 50. You
Okay.
know, a better test of that 50. If not, come down to about 50% of this candlestick right in here. Come down to about that level. That
That's
would be
that,
about 618.
that's exactly the 618. Yep. And see, and for the most part, what I try to teach my students, guys, is we look for the same thing over and over again. Danimal refers it best to the 1, 2, 3 strategy. And believe it or not, guys, all we're looking for is an impulse correction. And then from there, its price going to continue trending or go lower for whatever reason and create a new impulse correction and extension. So, and this is how we're actually trading the New York strategy that one of master trader students has shared a strategy with us. So basically, price is making an impulse. It can't go up forever. What happens after this? Well, it's going to be a retracement. Okay. This right here, this pattern right here is one of the most important patterns to understand. Your low, your high, and your higher low, or vice versa. Why? Because you can slap or put a Fibonacci retracement tool on it. Okay? That's the most important reason why. You got a low, you got a high. I can do this on one single candlestick too. We've been doing it with the weekly candlestick and the daily candlestick. But once the retracement is over, okay, once the retracement is over, price is going to try to find support because of the bullish impulse. Price is going to try to find support anywhere below the 23%, 38, 50, 61, 8, 78%. Okay. That's what happens every time. Now, sometimes, for different pairs, different scenarios, sometimes it'll go lower, sometimes it'll go higher, right? But there's three levels of price action that I'll go ahead and just explain it here. There's like the hot zone, the strong zone, okay? And then there is the trending zone right there. Trending zone, and then there goes what we call the institutional zone when price makes that deep retracement down to the bottom side. This is something that I learned from when I first started learning how to trade, but within my first year, I came across a trader that showed me how to use the fib, and this was kind of my first breakthroughs, right? Since then, I refined it in my own way, but credit to him. So we got the impulse and the correction. So here, what's supposed to happen next? Well, what's supposed to happen next is we're supposed to trend, right? We're supposed to trend and make a higher high to one of these extensions. Simple as that. Well, if it doesn't trend, it's going to stop around the 23% and zero and create what? An M pattern, right? Was
Yeah,
that
so
that?
yeah, no, no, no. Yeah, there we go. Mhm.
Yeah, there it goes. So were you getting at anything else, animal? If not, I'll continue.
No, I'm cool. I just had to sneeze.
Oh, that's what it was. Okay. Yeah, so impulse, correction, extending. So to get this buy, right? This is kind of where we get in and we take profit somewhere around there. But if you're bearish for whatever reason, right? You start looking for sales up here, thinking that or speculating, not thinking, speculating that this potentially could be the new impulse down. This is the new retracement, and this is the new extension. And that's how you kind of make some money both directions. So price is either going to trend or stop trending and reverse. Okay. Um, so let's use this information here to speculate what could happen next. Okay. Let's go ahead and erase that. All right. So unless I mean we could do it either ways. Let's just use the Friday's price action. Okay. One more time. Let's fib that level by itself. So we fib Friday's price action by itself, the range. Okay. You see how it made an impulse, it came down to 78. It's trying to trend, but that previous weekly high, that 43.50 price level won't allow it. So, if you're more bearish, these are areas to potentially start looking for sales. And you try to take it back down to the 78% of the previous day. Or if you really want to take it day by day, okay, we can use simply just yesterday's price action. Where it is. And we can make a decision right here. Okay, here goes Wednesday's price action. Anything that's not inside is considered Thursday. So we came down to where? The 50%. We are getting a reaction. Okay. And if we cannot pass up the zero and this 0.23% level holds, well, price is going to go simply lower to a lower level. So if you were bullish, you should have got in here at 50% based on the previous day. Okay, if you were bullish. If you're bearish, we're in a selling zone right now. Where could it get to? I would think at least the 78%, which is 43.12. 43.12 is a nice target to look for sell. If you're bearish, if you're bullish, and if you're not in from 50%, you got to hold your ground, let price create a little trend in the selling zone, and then you take it to the extension. All right. But I would like to come down here, but that's too far of a stretch, at least to these lows. Okay. At least to these lows. So let me share this with you guys. Hopefully you guys got a lot of value from that. Let me look at some intraday stuff. See if we can have a setup for tonight, carrying on to the morning. So this is selling zone. Alrighty. If you're bearish. And I personally would like it to go to the 78% of the previous day. Take profit along the way because it's a bullish day. You may have some bullish volume, give or take there. But you're looking at a $25 drop. That's 250 pips. Okay. So not a little bad opportunity there. Let's get this. Copy link. Goldie. Beautiful. Okay. So you guys have the chart. Let's look at things intraday with all the tools that I like to use that I've coded, and let's see how everything else is lining up with this speculation. I'll go to a different chart since that one's all chewed up. So with the system that I use, right, it's called the structure momentum timing system. Basically, the market is communicating to me, who's in control, which is the structure down here. If momentum is bullish or bearish, kind of like volume. But most importantly, right, we have this system called the time box, where it's kind of communicating to us in real time if the buys are exhausted or not. And right now, it's been trying to create a higher high, and it can't. And it's like exhausted in E, like -9 candlestick. It had 26 candlesticks, 26 hours before the pull. So the system basically, when it's trending bullish, it pushes up. Let me go ahead and write this. Okay, when it's trending bullish, so we're looking for buys. when the system realigns. So we first need to wait for a pullback. Let's see. Yeah, okay, here it is. Okay. So structure is bullish, momentum is bullish. You got the little time box, the little circle called the time box there. So what does this mean? So if you turn this on, this is basically the S&P legend. This is the complex pullback, means we're going to get a deeper pullback closer to the 50%. And right there. So as time moves forward, all these boxes move forward as well. And there it is. And there it is. It realigned. So the front buyers, the smaller buyers are in alignment with the bigger buyers. And there goes that countdown. I give it 26 candlesticks for us there. And that's where you look for some buys. See how price came back to 50%. And then from there, it's slightly pushed up. It's pushing up, it's pushing up, it's pushing up. It did push up. I'm not gonna say it didn't, right? But it hasn't done a pullback since. So it's kind of exhausted for about nine or not 26 plus 9, 35 hours. This thing has been buying for 35 straight hours without a proper pullback. So it's a little exhausted, a little gassed. So I think that little drop will be very nice for us to consider. Where do I have it? 43.12. Yeah, perfect, right? The top 23 percentile line, that'd be perfect. All right. So, and again, in a couple of hours, in 2 hours to be exact, we'll start getting the pullback phase one more time. So this is a bigger time frame scale. I also have an intraday scale, kind of get a better read on it. It's still bullish, as you see at the bottom, right? Structure is bullish, momentum is bullish. Time box has been trying to trend now for about 14 candles, and it really cannot push up. But again, though, right, that's what's important right here. In about an hour and 5 minutes, this little pillar, this foundation pillar, is gonna be outside of the box. So that means that this big box right here is gonna shrink and therefore kind of shift the structure and potentially kind of bring it back down. So
That's what I love about the box system you got there, those 23 and 78 levels right there, the two black lines. Those are key.
Yep.
Yep.
Those are money, man. Those are money. And if you can read them on those multiple scales, man, they're really, really good. And that's what I'm saying. I'm thinking this 43, 39-ish area is a good area to kind of see if we can poke a sell. And then, I mean, as simple as possible, without even marking up anything, just put in an arrow, see if we can, that 43.39 level holds, and you take it down to 43.16. That's kind of the game plan for this. So not bad, man. Not bad. I think on the 2 minute, it already changed. The 2 minute already shifted bearish. So the small wave that creates the next wave on the 5 minute has turned bearish. So there is some selling pressure on the 2 minute time frame, as you guys see. Right, and you guys see. So yeah. But other than that, guys, that's it. That's it. You guys have my other chart there. Keep that one in mind. Keep that one in mind. I'm favoring longs, but I'll try to look for them in New York. But I think between now and London, we can get a little push down, or just accumulate here for a while. So perfect, perfect, perfect. There goes this one right there. All right, guys, we will wrap it up today. I appreciate everybody being here. For this, we'll be back again. We'll be back again for Trade Lounge. Oh, hey, it's happening. How are you doing? Good to see you. I was hiding the cameras there. Welcome in. But yeah, welcome. Again, I have I'll be having if you guys are familiar with the school platform, we'll be opening that up pretty soon. It's free and open to the public. I'm gonna create a learn to trade course. I'm gonna create a lot of little, tips and tricks on TradingView, MetaTrader 5, and so forth. All that complimentary with some good stuff there. And then again, the ways to join my private community, and or the live trading sessions that I do at the COC live community. So yeah, the school is already starting to be fun. We're starting to open it up there. But yeah, once I have certain things lined up, hopefully, for the trade lounge guys, the trade lounge group, we'll have everything ready for you guys next Wednesday. But for our private group that are current members, that I'm behind a day or two, so I'm getting there. I'm getting there. But I do appreciate everybody being here. Any questions? Telegram is open, Instagrams are open, WhatsApps are open. Feel free to message me there. My pleasure. Yeah, sorry on this Zoom, it won't allow me to unmute you guys. It's just the way it's set up. I gotta I'll fix it, but you guys can always open chat as well. So thank you guys. Have a great day. And what is it, Christmas next weekend? Yeah, we probably won't have a trade launch this Christmas Eve, so we'll try to make it up somehow. I'll communicate somehow, guys. Okay. Thank you guys. Have a great evening. We'll see you guys on the next one. Bye now.
Later.
See you, Daniel.
Yeah, and we'll see you Sunday too. We're gonna be
Oh,
having something this
yeah,
Sunday.
we do a Sunday. We'll do our Sunday study group.
All right, cool.
All right. Thanks.
Have a good night.
I'll send you a link, Bernie. ASAP here. Thank you.